Financial expert Tom Lee just shared some really important news on CNBC that could totally change how we invest. He looked at all the numbers and thinks there's a really good chance we're seeing the lowest point in the stock market right now, right before it's about to jump way up. If he's right, this could be the perfect moment to grab stocks at a steal before they get super expensive. In this video, I'm going to play the part where he talks about it, explain what it means for you, and tell you about 3 stocks you definitely want to buy that could go through the roof by 2025. First off, please hit that like button, share this video with your friends, and subscribe to the channel. Let's try to get this video to at least 300 likes. It would help my channel out a ton.
Well, yesterday really was an indiscriminate selling day. Did Tesla's valuation and fundamentals drop 15%? Did the broad market have a 4% decline in valuations? To us, it really looked like a lot of liquidation. I think investors are, of course, reacting to the White House warning of pain ahead, but it has been more of an equity sell-off than it has been in corporate bonds. So to us, 4% down days, yeah, I think it's an overreaction.
Yeah, how do you best explain that difference between what equities have done and what we've seen in IG and even high yield?
Well, I think on the stock side, markets are now saying, look, the new regime is we have to take the tariffs seriously. Now we don't know how long these tariffs might be. Will it hurt growth? And we've seen cuts from economists. But the bond market is saying, well, you know what? This is a growth scare. But the Fed is also now in a position to begin cutting because inflation pressures are abating. So I think the bond market is sort of pricing in a Fed put. The stock market saying, I'm not sure if there's a White House put, and then the Fed's on hold, and I think that's the divergence.
So which one should we be listening to?
Well, I think the Fed put, in fact, is probably coming back because the odds of a May cut have been inching up. They hit 54% yesterday. And, in fact, total cuts hit 3.5 cuts, which is now 2.5 or 1.5 more than the Fed's guided. But I think that the Trump put exists. I mean, I know they've explicitly said there isn't one, but look at yesterday. Tesla's down 15%, and on Truth Social, Donald Trump talks about Tesla. So I think a put exists. We just don't know the level when the White House intervenes, and then today's the Business Roundtable. We'll find out.
He does, but then he kind of ratchets up the dialogue as it pertains to the trade war this morning on Truth Social, regardless of all of the headlines surrounding tariffs and the trade war and what it means for growth and what it means for the market reaction.
That's right. And for a while, markets ignored those tariff headlines, and now they're taking it very seriously. But I think at the end of the day, if we take every headline at face value, then markets are completely paralyzed. And of course, that again creates opportunity because at some level, all these stocks are really attractive opportunities, especially something that's had a 50% drawdown.
I mean, you can talk about the NASDAQ being an overreaction at a 4% down day, but Tesla was up $500 billion in 2 months at the end of last year. I mean, was that an overreaction to the upside? This is what we're trying to figure out, right?
Yeah.
Where do we start out with in terms of valuation and investor expectations coming into this period when it's become a little bit more noisy?
Yeah, well, there used to be this term a while ago called rage selling, and I think these days with instant liquidity, markets have rage selling. And I think it's not just individual. I think institutions push a button and go flat. So I think that, we're getting whipsawed these days. And I don't know where to titrate that. Like, was Tesla worth double what it was compared to November, and now is it worth half? I'm not sure, but I think it's somewhere in between.
Meantime, there's still a lot of desk notes about CTA supply and the next 5 days. There's plenty to sell. Are you buyer that even if we bounce today, it's going to be more of a process?
Well, I think positioning does tell us we're stretched to the downside, and we know markets are oversold, and we know sentiment's bad. I guess the real tell is we need to have follow through because last week felt like we could be bottoming, and we failed Monday. But do I think that a 10% correction shouldn't happen? I mean, this is like the 6th correction of 8% or more since 2022, so it is pretty garden variety. But, getting down more than 10% to me is like we've got proof of a recession. And I think that that's why the data points next few weeks are going to matter.
Yeah.
Tom Lee pointed out something really interesting happening in the market. Everyone's selling everything, no matter what. When the market drops like this, it's actually a great time for people who invest for the long haul. Lee said it's more like everyone's just trying to get rid of their stocks, not because the companies are doing bad, but because everyone's scared, unsure, and big investment companies are selling automatically. He even mentioned Tesla's big drop and wondered if it really made sense for it to lose so much value so fast. This shows us that when everyone's freaking out, stock prices are more about feelings than reality. This is when smart investors can make a lot of money. History shows us that the market often drops by 8 to 10%, and we've seen it happen 6 times recently. Yeah, it can be scary when stocks go up and down so quickly, but it's also the best time to buy stocks that are growing fast, especially in new areas like artificial intelligence. Lee also said that the market is now paying attention to things like tariffs and problems between countries, which makes things a little shaky. But once everyone calms down and thinks clearly, good stocks always bounce back. And yes, AI stocks got hit hard recently, especially the big tech companies leading the AI world. I think it's just people getting scared for no reason. These AI companies are still strong. They're still coming up with new ideas, have a lot of room to grow, and are still the biggest players in the market. Only their stock prices went down, which means it's a good time to buy. Some of these stocks dropped as much as 20% from their highest prices, but that's where the opportunities are. When good stocks go down, smart investors don't panic, they buy. The companies are still strong. People still want AI. Businesses are spending a lot of money on making things automatic and using machines that can learn. And when the market gets better, these AI companies will skyrocket. When everyone else is scared, the smart money knows it's time to buy. History has shown us that when the market goes down, it's the best time to buy good stocks at a discount. And right now, AI is the future, and it's on sale. Trade problems won't last forever. Sure, things might cost more for a while, but history shows us that markets adjust, businesses adapt, and the economy keeps growing. That's why I'm looking at the big picture. AI isn't just a fad, it's a huge change that's happening all over the world. From making things automatic to analyzing information to teaching machines to learn, AI is becoming the most important part of the future economy, and the companies leading this change are currently on sale. So while a lot of people are selling because they're scared, I see a great chance to buy strong AI stocks at a discount. The future belongs to those who look past the headlines and invest in what's coming next. We're about to talk about 3 top AI stocks that are currently undervalued. These companies are building the future of technology, and if you buy them at a discount, you could make a lot of money when things get better. Now is the time to pay attention. Let's start with NVIDIA. When it comes to AI, one company is the best. NVIDIA, ticker symbol NVDA. Since 2023, it's been the leader in AI stocks, powering the AI revolution with its super powerful graphics cards, GPUs. These GPUs are the heart of AI, giving the massive computing power needed to train and run complicated AI systems. From big tech companies to labs doing research, everyone uses NVIDIA's technology to make AI better. Now, some investors are worried. They think that as AI gets better at doing things, we won't need as many GPUs. But here's why I don't think that's true. The biggest AI companies like Microsoft, Google, and Amazon are spending even more money on AI. They're spending billions, and a lot of that money is going straight to NVIDIA. NVIDIA, founded in 1993, originally focused on the gaming world. Did you know that NVIDIA's very first product, the NV1, was a multimedia card that also had a Sega Saturn game controller port? AI isn't slowing down, it's just getting started. And as we need more powerful computers, NVIDIA is in the perfect position to keep being the leader. Even though it's been super successful, the recent market drop has created an opportunity. NVIDIA's stock has gone down. So now is a great time for people who invest for the long term to buy before AI grows even more. So is NVIDIA still a good buy? Absolutely. If you think NVIDIA's AI dominance is ending, you're wrong. The company is set for a huge year, and the numbers prove it. NVIDIA's leaders are predicting a 65% increase in revenue, reaching a massive $43 billion in just the first 3 months of 2026. That's an insane growth rate for a company this big. And what's making this happen? Blackwell, NVIDIA's next-generation AI chip. The Blackwell GPUs are way better than the previous Hopper series, allowing AI systems to be trained and run much faster. In other words, AI development is only getting faster, better, and more powerful, and NVIDIA is leading the way. For the entire year of 2026, Wall Street analysts are expecting a 56% increase in revenue, showing that NVIDIA's AI boom is far from over. Even with these huge growth predictions, NVIDIA's stock is being priced like its best days are behind it. Right now, it's trading at less than 26 times its future earnings, the lowest it's been in about a year. To put it simply, the market isn't realizing how much potential Nvidia has, which is exactly what investors dream of, a fast-growing leading company trading at a discount. That's a buying opportunity. So, while some investors might think the party's over, I'd say it's just getting started, and Nvidia isn't the only AI stock that looks undervalued right now. This is a screaming bargain price tag for Nvidia, and investors should take this opportunity to buy shares of this long-term winner. If you're enjoying these stock analyses and finding them helpful, please take a moment to like this video and share it with your friends. Your support helps my channel grow and allows me to bring you even more valuable content. Thank you. And up next, we'll look at Alphabet. Alphabet, Google's parent company, is trading at a price that's almost too good to be true right now. Alphabet stock is trading at just 21 times trailing earnings and an even lower 19 times forward earnings. To put that into perspective, the S&P 500, the overall stock market, trades at a higher valuation of 23.9 times trailing earnings and 21.6 times forward earnings. That means at current prices, Alphabet is actually cheaper than the broader market. And that just doesn't make sense when you consider how deeply embedded AI is in Google's business model. Think about it. Alphabet is at the forefront of AI innovation, from its industry-leading search algorithms to the powerful Gemini AI models to the vast potential of Google Cloud's AI-driven services. This company is shaping the future of technology, yet despite its dominance and growth, Wall Street isn't pricing it like an AI powerhouse. That's where savvy investors come in. When you can buy a world-class company at a discount, you take the opportunity. Alphabet is not just a search engine, it's an AI giant, a cloud computing force, and a digital advertising empire all rolled into one. And right now, the market is giving us a rare chance to buy it at a ridiculously low valuation. I believe this is a golden opportunity for long-term investors. AI is only going to become more essential, and Alphabet is positioned to reap the benefits in a big way. Alphabet isn't struggling, far from it. Its core business, Google Search, is thriving, driving massive growth. In the fourth quarter alone, revenue jumped 12%, and earnings per share surged 31%. That's not what you'd expect from a company trading at a discount. Yet despite this strong performance, Alphabet stock is priced cheaper than the broader market. While the S&P 500 trades at a higher valuation, Alphabet is sitting at just 21 times trailing earnings and 19 times forward earnings. That's a mispricing you don't see often for a company of this caliber. And here's the kicker. Wall Street expects Alphabet's revenue to grow another 11% in both 2025 and 2026. That's market-beating growth from a company already dominating AI-driven industries. Think about it. AI is woven into everything Alphabet does. Google Search uses AI to deliver better, more relevant results. YouTube leverages AI for personalized recommendations and ad targeting. Google Cloud is expanding rapidly with AI-driven enterprise solutions. DeepMind is at the cutting edge of AI research and innovation. So, we have a company that's leading the AI revolution, growing fast, and trading cheaper than the overall market. That's the perfect setup for a stock that could outperform in the coming years. Smart investors look for value where others aren't paying attention, and Alphabet is a textbook case of an AI stock trading at a bargain. Did you know that Google's original name was Backrub, reflecting the company's early focus on analyzing backlinks to understand web page importance? This evolution highlights how the company has continually innovated and adapted. Last but not the least is Taiwan Semiconductor with ticker symbol TSM. Now let's talk about a crucial player in the AI revolution, Taiwan Semiconductor. While AI software gets all the attention, none of it would be possible without the high-powered chips that fuel it. And TSMC is the undisputed leader in advanced chip manufacturing. Despite being one of the hardest hit stocks in the recent sell-off, TSMC has taken steps to protect its business. The company has sidestepped trade war risks by announcing a massive $100 billion investment in U.S. chip fabrication facilities, a strategic move that strengthens its global footprint and likely keeps regulators off its back. This is on top of the $65 billion investment announced a few years ago, bringing its total U.S. investment to a staggering $165 billion. The message is clear. TSMC is serious about securing its leadership in semiconductor manufacturing. And here's the exciting part. Despite all this expansion, TSMC's stock is still trading well below its highs. investors haven't fully priced in just how critical this company is to the future of AI. The AI boom isn't slowing down anytime soon, and TSMC is at the heart of it. The company expects revenue to grow at a 20% compound annual rate over the next 5 years, an astonishing pace for an already dominant industry leader. Think about it. Every AI-powered device, every self-driving car, every cloud computing system relies on high-performance chips. And guess who makes the most advanced ones? TSMC. It's hard not to see TSMC as a no-brainer buy right now. One of the biggest concerns hanging over Taiwan Semiconductor was the risk of tariffs. But with its massive $100 billion US investment, that worry seems to be off the table, and that's a game changer for this stock. TSMC isn't just another semiconductor company, it's the backbone of the AI revolution. Every major tech giant, from Apple to Nvidia to AMD, relies on TSMC's cutting-edge chip technology to power their devices and AI models. Now that the tariff fears have eased, investors can shift their focus back to the company's incredible growth. And let me tell you, the numbers are staggering. AI-related chip revenue is expected to grow at a 45% compound annual rate over the next 5 years. Overall revenue is projected to grow at 20% annually. That kind of explosive growth is rare for an already dominant industry leader, and yet despite these incredible projections, TSMC's stock is still trading at just 19.8 times forward earnings. Let's put that into perspective. You're getting one of the most critical companies in AI at a valuation lower than many slow-growing stocks. That's an opportunity you don't see often. This also makes TSMC stock cheaper than the market, which is hard to understand because of its unique position in the AI arms race. Taiwan Semi is a screaming buy at these price points, and investors should take advantage of the stock while it's down. TSMC, established in 1987, pioneered the dedicated semiconductor foundry model. Fun fact, TSMC's founder, Morris Chang, was inspired by the idea of creating a company that focused solely on manufacturing chips, allowing other companies to focus on design. This revolutionary approach changed the landscape of the semiconductor industry. These aren't just good companies. They're industry leaders that will shape the future, and right now, they're trading at prices that could make long-term investors very happy. If you believe in AI's future, this is your chance to invest before the market wakes up. If you found this video helpful, hit that like button, share this with your fellow investors, and subscribe so you never miss out on the next big opportunity. Thanks for watching, and we will see you in our next video.